Nature of Society Part 4 Session 2R. We began Part 4 Session 1 last week by looking at the subject of banking. We looked at how it all began and how it has evolved into the situation today, where the currency that is issued by all banks are not necessarily backed by gold, as it was then in the early days, but simply on the matter of trust that citizens have for it. Banks have used this trust that has been built up over centuries to lend such currency or paper money to those persons seeking to build projects, acquire property, fund a business, or acquire consumer items. The collateral demanded for such loans has in the main been properties or other valuables that prospective customers have in their possession that may be of equal or greater value than the loans provided. It was also said that these loans historically have not been backed by the ongoing production of goods and services, and this has led to and will continue to lead to the economic recessions or depressions that we have witnessed over time. The most recent of these phenomena was in 2008, and this was worldwide in scope. We also noted that banks are not necessarily providing capital or credit to everyone needing it, but to a token few who can provide the collateral demanded. What have we found during the course of the week on the subject of banking? So let's start again by returning to the question of the true and rightful role of banks in a country that wishes to optimize its development. We should begin by asking the question, what do banks do in a community? They essentially take deposits for safekeeping from individuals, corporate citizens, the state, through its various ministries, corporations, and departments, and even foreign nationals and enterprises. They subsequently lend this money capital to whoever qualifies for such loans at such lending rates which turn a profit and provide dividends to its shareholders. Many of the ordinary folk who place their savings into such banks find it hard put to qualify for loans for their many needs and wants. Many of these folks neither have enough savings nor collateral to qualify for loans. These persons occupy a broad range of the artisans and skilled workers who virtually build the community: plumbers, masons, electricians, carpenters, furniture makers, factory workers, clothiers, and many small business owners. Because of the unique service that banks offer to society, they have the unique responsibility to augment and assist more directly in the production process by providing loans primarily for development purposes. Today, banks provide primarily for consumption, and in the side value tax environment of necessity, this would change to loans that facilitate production. A loans biased towards production would do two things. It would first encourage savings, and citizens would develop the thrift and prudence to purchase items for consumption out of their own pockets rather than other people's pockets. Secondly, it would provide more available capital for production and development purposes on local sites and would reduce the overall risks that banks now carry, as the cardinal rule of loaning money only when backed by production is observed. Banks would now focus its attention on sites that are producing rather than consumption of goods and services. This would have a revolutionary effect on how they now do business and would cause them to acquire new skills which they do not now have. More on this later. Lending for consumption would also be facilitated by offering at a higher interest rate, but the emphasis must be on providing credit for development purposes at rates that are affordable to the borrower and would not discourage development. Since there would be thousands of these productive sites in operations, the banks would make their profits over volume. Governments can facilitate this by setting up their own banks, state banks, which will take the lead in providing these low-cost development loans. They will only engage in development funding and leaving consumer lending to the private sector. This development funding would demand a new responsibility of greater accountability by entrepreneurs and bankers of ensuring that the projects are bankable before lending. Periodic audits and checks of operations by the bankers would also be necessary. Borrowers would have to have the level of education and know-how of business management or project management, or have in their employ the necessary personnel and resources that will provide same. The education system would have to ensure that adequate numbers of these skills and others are available in the community. But more on this in future sessions. Because thousands of entrepreneurs and homeowners would now be funded, the sheer volume of productive operations would not lead to inflationary conditions because of competition. These entrepreneurs, operations, and housing settlements would of course be subject to orderly planning and environmental policies. This will be discussed further in the session on environmental conservation and physical planning later in this lecture series. If capital in the banks can be offered in the banks and finance houses using a tiered system of lending rates based on needs and then desires, this would go a long way in rationing the capital available, such that all citizens receive the minimum required to lead a satisfactory life. The highest priority and the lowest lending rates would be reserved for productive activities on local sites that produce goods and services. This should be made accessible to anyone and everyone willing to so produce. Such basic needs as housing and commercial buildings generally would receive lending at basic rates up to an amount that would allow decent quality facilities, but higher rates would apply for more extravagant facilities. Let us have our usual break now. Even though governments should take the lead in setting up the development banks that will provide funding for production of goods and services on local sites, there will be much opportunities for both local and private banks and finance houses to provide funding for both development and consumption purposes. Competition here should be allowed at its keenest, with no possibility of cartels or arrangements between competitors being allowed, as is now the case in many countries, to the detriment of consumers. As indicated before, banks and finance houses must provide higher quality services that genuinely look after the needs of its customers, insisting that they also apply the appropriate managerial and technical resources that would ensure business success. Once this new culture of hard work is fostered in the banking industry, rather than what collateral the customers bring to the table, this would have a profound effect in the work ethic of the society and could lead to real prosperity over the medium to long term. The real point to make is that the banking industry would now seek to provide capital for the whole society to produce goods and services, and would not bias its services towards those more financially viable members. The banking industry must see itself as the important aspect in the capital factor of production. The usual requirements for capitalization and risk reserves that now apply to banks and finance houses will continue to apply, but the risks that banks now face may be lower because of the lesser likelihood of business failure. When failure does occur, the likelihood of business rebound, even if under new ownership, could be quick because the general conditions of demand would still be present. Failures in most cases would be because of the ineptitude of some bank business owners, and in the best of systems, this would always be the case. Even in boom and bust conditions, the flexibility and capacity to adjust would be greater under side value taxation because all stakeholders can adjust their demands. The government can adjust the SVT, the banks can adjust its loan requirements, and the entrepreneur can lower his own expectations. The increased competition in the marketplace will tend to have the banks and finance houses look more closely at operations of the businesses they fund. The efficiency and viability of these businesses will be closely examined to determine whether their assets are being employed optimally and are yielding the desired results. This approach becomes even more important when additional funding is requested for business operations. This new scrutiny will likely result in greater viability and success of the business than would the past approach of only being interested in security-backed loans. This then is a synopsis of what the new approach of banking will be under a side value tax regime. It will transform the economic and physical landscape of both developed and developing countries. What do we think of all that is said here? Next week, we will continue our discussion on a new subject, labor and education. Before we end, I would like again to let you attendees know that Unsustainable Development is an educational offering devoted to the dissemination of its course to all of mankind and to those who have the English language as their official language in the first instance, and to all eventually all over the world. We have in fact been sending this course all over the English-speaking world with very favorable responses. To continue to make this possible, and because we do not charge a fee for this dissemination, we rely wholeheartedly on monetary donations to meet the cost of achieving these goals. If you have found these sessions useful thus far and would like others to have access to them, we would gratefully accept your donations should you be inclined to offer them. You can send donations to our PayPal account at the email address nigelgittins@gmail.com. Thank you for your kind gesture.